Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Dan Wang, Eurasia Group's Director of China Research. Dan, thanks so much for joining me.
Yeah, thank you for having me again.
You joined me about 2.5 weeks ago, and we were talking about the trade war between the United States and China. And we have seen a seismic shift since then, particularly in recent days, because over the weekend, the two countries agreed to majorly roll back the tariffs for 90 days while they continue negotiations. When you're looking at the temporary agreement, what are some of your takeaways?
Well, this is certainly a unexpected result for anyone, and the market was pleasantly surprised, and there was a rally everywhere in the world. And as far as we know, the Chinese counterparty for the US is also a surprise because within 2 days, that's a lot of conclusions to be made. And for Chinese exporters, they finally caught a break, especially for the SMEs. And for Trump, it can also be claimed as a win, given that China also made compromises. And it will be very interesting on what's going to happen after 90 days of truce. But at this point, it does seem like the best result for both.
And it seems like you said, I mean, 2 days it was shocking. And there's this new tone because both sides, up until this point, were very tough. They had harsh rhetoric for the other. The United States blamed China for the escalation. China said, we're not coming to the table under duress. Now both sides are saying there was a lot of progress made in these 2 weeks. There was substantial talks. There's this new tone. Are you reading into that? And what does that indicate to you?
I don't think it suggested a fundamental reversal in the bilateral relationship because China is still the same China. It will still conduct industrial policy through the state subsidies, and the US will still want to coerce China, especially President Trump, into this new trade regime. It wants China to eliminate a trade surplus with the US, want more Chinese companies to invest in the US, wants to reindustrialize the country. But for China, a lot of things are non negotiable. At this point, what's negotiable is actually the magnitude of the tariffs, not how much retreat that the US would do when it comes to sanctions on China. We believe there will be more non tariff barriers coming out in the future. Export control, technology ban will still very much be in place. The 20% of fentanyl tariffs would be on the table for negotiation, but we're not even optimistic that this part of the tariff can go away eventually.
So let's talk about the numbers where they stand now. They were both slashed pretty significantly, triple digit slashing for these tariffs. The tariffs that China had on the United States' imports are down from 125% to 10%, and the United States' tariffs on Chinese imports are down from 145% to 30%. What do you make of that number? I mean, are you surprised to see those tariffs slashed by 115% apiece?
Oh, yeah, absolutely. And when it comes to the tariffs on China, the 10% reciprocal tariff was kept, but the 24% was suspended. And that's very much a surprise because it's the whole logic behind Trump's tariff war. It wants China to pay, so it was not on equal footing, according to him. But at this point, it just seems China is enjoying the lowest tariffs among all trading partners, including the American allies. And that's why we believe eventually, probably by the end of this year, the China US tariff from the US part on China probably will go back still to the 40% to 65% range. But currently, it is relatively low. So for China, the nominal rate is 30%, but the effective rate is about 45% in terms of the tariffs subject to different sectors and also the general tariffs. Of course, we all enjoy to see this kind of break because the recessionary pressure is real. Both sides will try very hard to win their trading partners. We can see that both presidents are talking to ASEAN countries, to Latin America. So it's going to be very interesting on what's happening in the next 90 days.
Global markets really rejoiced at the news that this trade war seems to be thawing. But you warned last time that with those escalating tit for tat tariffs, there is a real chance for recession. There is a real possibility here of inflation. How will this pause impact the Chinese economy specifically?
The market is very short-sighted. As long as there's some surprise, especially pleasant surprise, then the market will rally. But for China, the biggest problem is still in the job market. The export sector, although they would enjoy a temporary break because the shipment is already being rushed, we have seen this flooding phone calls to the shipping company that exporters are trying to book new containers to ship to the US. But the new orders didn't really go up that much. It's mostly the rush shipping before the new tariff kicks in. So for Chinese economy previously, we believe that the 100 something tariffs will knock off 2 percentage points of China's GDP. And the Chinese government will respond by a bigger fiscal stimulus. So in the end, we're probably looking at a GDP growth around 4%. But now, with the alleviation of so much tariffs, even if it's just for 90 days, it could boost China's export significantly in the next 3 months. So now, instead of knocking off the 2 percentage points, we believe about 1.5 percentage point will be knocked off. We're probably looking at a 4.5% of GDP growth for China.
I want to read something that U.S. Trade Representative Ambassador Greer said regarding the negotiations. He characterized them in Switzerland as this quote, a very constructive 2 days. It's important to understand how quickly we were able to come to agreement, which reflects that perhaps the differences were not so large as maybe thought. That being said, there was a lot of groundwork that went into these 2 days. What do you think that groundwork is, A, and B, what is left to really hammer out in the next 90 days?
So, given how conservative Chinese leadership is, there must be tons of talk before this actual meeting took place. And we do not believe that Chinese officials just improvise on the spot. So, there were the non-governmental, maybe the track 2 or track 1.5 talk happening between top officials and former officials on trying to make the negotiation or the contact easier. And for China, what's more important is by starting this conversation, it could really see whether there's any sincerity from the US part or whether it's just a pretext for isolating China. It turned out the result is positive. So even if the two leaders may or may not meet by the end of this year, we believe that the communication channel will be more open than before. At least on the China part, they know who to talk to. It is Benson. He's really leading this whole negotiation. And China also appointed a new trade negotiator. So things are happening towards the positive side.
I'm curious. I know you said earlier in this conversation this is a win for both sides, but you and I have talked before, and we have said that President Xi nor President Trump don't want to be viewed as the person who blinked first, who caved to the other's demands. Is there a sense that either leader, either country blinked first in these negotiations as they are right now?
They probably blink together. The pain is felt very visibly in China because the orders were canceled, the shipment, the unemployment. They're very much a big shock to the domestic economy. But for the US consumers are not used to this kind of economic situation, like possible shortages of daily necessities. In the future, they might see a lot of empty shelves. Especially when it comes to those big holidays, Halloween, Christmas, towards the end of the year. So I think this timing of the meeting is also happening before that because President Trump doesn't want to deal with this new phenomenon that the domestic consumers has to endure. And I still don't believe there's any fundamental changes, although this is a temporary win for both. Um, there's no mutual trust between China and US. It hasn't changed. And for President Xi to be willing to talk to President Trump, there has to be more certainty from President Trump. But we know that is the one thing that he cannot offer.
And President Trump characterized this on Truth Social as a total reset. That's what he said about the negotiations. And he wants to see China open up for US business. Is that a non starter for President Xi? I mean, is there a possibility that that does happen?
If there's anything to be said about this Chinese government, it's surprisingly consistent in its macro policies and in its diplomacy. So, unlike President Trump, President Xi is long term and strategic. So there wouldn't be some sudden changes overnight when it comes to the economic response. So for certain response towards extreme events like COVID, for example, the country could be opened up within 1 week. But still, before that, there was like 1 year to 2 years of preparation. Eventually, it would give up on certain policies. For President Trump to say that this is a total reset, it is more from the US side. The tariffs are not sustainable at this level, and the US cannot find a alternative or even a combination of countries to replace China for those consumer goods or industrial inputs. So it is a realistic or pragmatic choice for Trump. But I do think he has achieved this temporary win when it comes to what China can give to the US. So a lot of things could be on the table. For example, the negotiation on the currency, the negotiation on more investment into the US, or even opening up the domestic market more for the US companies.
And we're talking about obviously negotiations between the world's two biggest economies. And you're saying that there's still, even though they had these productive talks in Switzerland, no trust on either side. Fundamentally, not much has moved, not much has changed. 2 weeks ago, you said the relationship between the United States and China is beyond salvation. As we sit here right now, do you still see it that way? A, and B, what does this temporary truce do to US China relations?
I still believe this is the case. 90 days is very short period of time when it comes to trade diplomacy. It could easily take years or even decades. And for China-US relationship, the long-term competition will stay in place. And if you just dive into the narratives that Chinese leaders have been sticking to, it is this high-tech transformation. It is aiming to win in the long term. So the short-term concession, maybe in terms of tariff, can happen, but China will not change course. So the United States under Trump is a different United States. It is backing away from this globalization and partially from being the global leader. And China is not going to concede in that front. It's trying very hard to win the global south and has achieved temporarily on a lot of the fronts, like the currency arrangements with the global south, especially Latin American countries, and the investment deals with Greater Asia. So the competition will be here to stay. The real question is whether we could avoid a painful war, I mean trade war between the two countries again before any improvement happens.
I mean, to that point, they're trying to jam in these conversations that could take months and years in this 90-day period because both economies are going to feel that pain, especially with the holidays just a few months away. So, in this 90 days, what specifically are you looking out for next?
I think one front is on the trade talks with other trading partners. For China, U.S. importance is going down. It has gone down in the past decade gradually, but now the speed will really pick up. Europe, as the second market that yield the highest profit for China's exporters, will become more important. Of course, everyone is worried about China dumping excess capacity into their market and cause higher deflationary pressure for them. And for China, this is a real problem too. So I would follow closely on how China manages currency because pegging the currency with dollar at this point is not ideal since dollar is getting weaker. If Chinese yuan is also getting weaker since it has this informal peg with the dollar, it will also get weaker against the euro, against other Asian currencies, and that means even higher pressure for those countries' domestic economy. So I think the Chinese government will make some major changes in the next year or two when it comes to the currency policies, maybe pegging to a basket of currencies rather than just with dollar. There will also be a lot of the new trade deals with, say, Japan, Korea, with other neighbors, and investment deals with ASEAN countries. Um, and for the middle power caught between China and the US, the most important thing is not to take obvious sides with either, because it's going to be a big risk losing either the support from the US or the market from China.
Well, there is certainly a lot to keep our eye out for in the upcoming weeks. And I hope when we do see significant developments, you come back on, provide your perspective, and break them down for us. Dan, thank you so much for joining me. You're welcome back anytime.
Thank you so much.